What's going on, everybody? Today I have a video that's a little bit different, but it's kind of a glimpse into my day-to-day on how exactly are we purchasing these properties with zero money, zero credentials, and just kind of like walking through a conversation as to like what are some of the questions that come up when I'm talking to some of these real estate agents and sellers. So I have a video that's going to be going in depth on some common objections that sellers might have and that agents might have, about a property that we might be interested in, but most likely we're going to pass just because the numbers don't work. But I thought it could be valuable in sharing, in kind of getting some of the verbiage and communication if this is something you're looking to get into as well. So basically, what I'm pitching is a subject to transaction where we basically take over someone's mortgage payment. And that's kind of what we're going to be going deep into details in this convo. It's just a short 10-minute conversation, but I want to know some feedback on kind of what you guys think about this investment style. And also, too, if you're interested in selling your house, we may be interested in buying it. So, or if you're interested in getting into purchasing properties this way and turning into some of these properties into rentals, then just reach out to me. Ask questions in the comments. I want to be a resource for you. This business is going to be life changing, and it's going to be very beneficial for my family moving forward as we look to acquire more and more properties. So comment down below, let me know what you think, and check this out.
Okay, sounds good.
All right. Yeah. Thanks for meeting. Thanks for your time. Kind of came across this property. We buy 4 to 6 properties in Texas every month. We work a lot with traveling nurses. We do some short-term rentals. We work a lot with insurance companies as well for temporary housing. So I found this property in Leander. I know there's going to be some questions as far as, the process, but I guess like if any questions come to mind, whoever's first, we can try and answer those for you guys.
Sure.
Okay.
Bonnie, did you want to go or you're okay?
Well, I've got quite a bit. So,
Okay,
you want
please
me to
jump. Yeah,
start? Or
please go ahead. Yeah, absolutely.
you've
If you want to
read
go ahead
over,
and then I'll.
yeah, you've read it over. So a lot of it, you might have the same questions. And if not, then, interrupt or jump in or
Yeah,
whatever.
sure. Yeah.
Um, okay. So a big thing is how does it work with their lender? Because obviously, if it's not them paying it, I mean, then they could, not that they would because the lender just wants to get paid, but there is the chance they could foreclose. So how does that work?
Yep. Yeah, great question. That's awesome that you understand how the banks work. They're in it for the payments, right? They're not in it for calling notes due. And
Right.
basically, it's very simple. And what we're referring to is the due on sale clause. So this is
Yes.
a very rare thing that gets accelerated when there's a transfer of deed. But in essence, if it happens, which we haven't had happen in our business yet, um, we can do a couple different things. So we can show the lender that we have been making the payments on a consistent basis to whenever they pull that due on sale clause. So that's one option where we could either get our own financing, refinance under our LLC at the time, depending on when they pull this clause. And then there's another option where we basically just deed the property back to the seller and then do it on a land contract. So, or a contract for deed, basically. So the deed would actually stay in the seller's name, and then we would just continue to make payments on our LLC's behalf. So there's a couple different ways we can go about it. Thankfully, we haven't had that happen. And we always like with the first option, just have a dialogue, an open dialogue with the mortgage company, and just say, what are the things that need to happen here so we can keep making these payments. So that's kind of our first option. Backup option would be just deeding it back to you. And then obviously we wouldn't get any of the tax benefits or anything like that, but we would still be able to get a property that we could rent out. So those are the two options. Um, we come across that question all the time. So, um, our whole goal is to make sure that the seller is protected in these types of transactions because I talk to a lot of agents every day where they're pitched this subject to taking over mortgage payments and then they yet don't tell the sellers how they're protected because, it's a common transaction in the 80s and it's more common now because of the high interest rates. But like we're not going to move forward unless you get how you're protected. So um, and that's our whole goal, which is why we like these Zooms.
Right. Okay. You have something, Martin, on that?
Yes. Sorry.
Oh, just go ahead if you have something to add to that.
I was just wondering, when you talk about protection, Bo, so if the mortgage payments are going through from your LLC to us to the finance institution.
So there's a
Uh,
company we use. There's two of them, but we use this one mainly. You could just go to westloan.com and they're called Weststar. They're a huge servicing company that services all our mortgage payments. And they would pay the mortgage company directly on
oh,
our
okay.
behalf. And you
Right.
get access to a portal where you would be able to check all the history and whatnot. And basically, you're just going to get an email every month. Hey, mortgage has been paid. Mortgage has been paid. We keep about
Yeah.
1 to 2 months of PITI in an escrow account that you would have access to in case whatever happens.
Yeah.
World War III, you're able to at least access that capital to make sure that no payments get missed. Um,
Sure.
but then we also have a clause in the contract that accelerates a performance deed, where if one payment gets missed, like whatever happens out of the blue, the property gets automatically deeded back to you, and you get to keep all of the down payment. I would say improvements, but the house is in an amazing condition, so there probably won't be any improvements we make. But you would basically get the property back with more appreciation and principal pay down.
Okay.
So.
And so but the asset will be owned by the LLC, but the mortgage will be on us still. Is that correct?
Yep, that is correct.
So how does the, and because this is a new concept to me, so how does the bank reconcile that then? Because now the asset's separated from the mortgage. So because normally they want to offset the loan against an asset. So how does that work with the banks?
Yeah, the bank just has collateral against the asset. So to, it sounds like, because you own the asset. The deed is in your name, not in the mortgage company's name. So therefore, the deed
Yeah.
would transfer. The collateral would still stay the same in the mortgage, and we would be able to pay that through that third party servicing company.
Right.
Mhm.
But isn't the asset, so the deed's transferred to the LLC though, but the mortgage is still with us.
Yep.
So I'm not quite sure because how does that then work if those two, if the assets and the mortgage are separated then? Because so for example, and I know what you explained sort of goes that sort of pass through and it goes through that escrow account and then pays the mortgage to the bank directly. But if a okay, so here's an example. What's to stop the LLC from selling the property if the asset is separated from the mortgage?
Yeah, if the property is sold, we basically have in the contract that you would be off. If we sell it, you have a second lien position against the mortgage where you would get paid out whatever terms we write up, whether we
Yeah,
owe you payments over time or we cash out all your equity, that would be you would be released of total liability off of that asset. You would be completely
right.
off of the mortgage. So if we sold it, we would be off. The deed would transfer to whoever we sold it through. You would be totally
Yeah,
out of that mortgage and done. So that bank would be that the mortgage company is still in a first position. So they would get their
yeah,
payment and then whatever's
yeah,
owed to you, whether we owe you 20, 30,000 on a little bit of equity, you would that get
yeah,
accelerated and then the deed would transfer to the new buyer. But we don't we don't buy these properties to sell them right away. It's not like a
Yeah.
fixer or anything. Yeah.
Yeah, for sure. Okay, so because I'm just trying to understand the asset ownership, and so
Right.
where the equity versus basically you're saying that there would be a lien from both the finance company and myself
Yes.
on the property.
That's how the title company sets it up. Yeah, and that's how our TC sets it up as well. It depends because
Okay.
there's straight subject twos where, and I don't want to overwhelm you with information, but
Yeah.
basically that's just straight across taking over mortgage payments and giving you a down payment on equity. And then there's also
Right.
called hybrids, which is a subject to, but there's a little bit too much of equity in there where we can't come to the close table for it to make sense as an investment. So then we have the
Yeah.
owner carry in a second position the remainder of the equity. So you would whatever happened with the asset, we sold it. The bank is in first position, it would get paid off. You would be in the second position, you would get paid off whatever remainder owed, and then the deed would
Yeah.
transfer to the new buyer. Yeah.
I
So
see. Okay. So, yeah, it's almost like we're acting as a pass-through mortgage company to another company.
100%. You would essentially become a bank. Yeah.
Yeah. Okay. I see. Okay. And so the other question I had was around because there'll be a liability on our side. And so if we look to buy another property in the future, whenever that is, I don't plan on buying a property straight away, but at some point in the future, if we do go ahead with that, then this would be basically a liability on our purchase. But in the future, is there any way to claim any of the equity in the asset during that process of purchasing a new property?
Yeah, so that's going to show up, right, when you apply for any house in the future. Like that's going to show up,
Yeah.
obviously, like, hey, you have this loan in your name. What's going on there? So there's a couple
Yeah.
ways you go about it. And this just depends. It really depends on when you're going to buy. And I know that's kind of a broad answer, but if you're going to buy
Yeah.
within a year, let's say I'm going to buy in 6 months from now, basically we can write up a lease purchase agreement where it shows that new lender, hey, you're not responsible for these payments. We are, because you have it being technically rented out to the new renter. We could sign it up for a year-long lease. And then that would wipe out about 75% of the debt to income right off the bat.
Right.
Um, about after a year, you can take that portal access that you would have through Westar, and you would be able to show any new lender that we have made 12 consecutive payments on that mortgage instead of you, and that would completely wipe out all the debt to income off the bat there. So it really
Oh,
depends on
okay.
when you're going to buy. If you're going to buy in a month, we do that lease purchase agreement, be able to put that in place so you can then at least have 75% of that taken off your DTI. Most people we work with are buying relatively soon, so we just write it up in the contract that we're going to be
Right.
doing a lease purchase. Yeah.
Okay. Okay. Thank you.
Yeah.
Um,
You're welcome.
um, so Bonnie, did you have any other questions?
Yeah, and I got cut off, so I wasn't sure exactly what happened. My internet went long.
We were just talking about basically a little review was what happens if we sell the property, who gets paid off, how does the mortgage company get their fulfillment on their collateral, and does their name get taken off of that mortgage and whatnot. So and that's exactly right. So, but we wouldn't buy it to sell it right away. We'd wait
Right, you hold it.
for at least 7 to 10 years.
That's what I read.
Yeah,
Yeah.
because we want it to appreciate, and we also, I don't know what, I think the interest rate on this was 6.7.
Yeah.
So we've also done deals in the past where we put some contingencies in place where, hey, we'll write it out for 7 to 10 years. We want to refinance, but if interest rates go below 6.7 and there's 20% of equity appreciation, let's say that happens in 4 years, then that's when we would refinance. So
Right.
it doesn't have to, you don't have to wait 10 years,
Yeah.
Yeah.
Okay.
Okay. So this is an off question, but who's the attorney y'all use?
Oh, well, let's see. In Texas,
Is it Alan?
yeah, we have a couple. Yeah, I'd
Alan
have to.
Shesker?
Hmm,
You know?
so let's see. His name's Alan. Look him up.
Yeah, Ceshker.
Okay. That is he in the area or is he?
Yeah, and
Okay.
to my knowledge, he's the best here. So if it wasn't him, I would highly recommend that it be him.
Yeah. Oh, definitely. Yeah, I mean, we use an attorney on every transaction. And that's just we want everyone to be protected and give a little more comfort to the seller as well. But yeah, I don't know if we use Alan. But yeah, we can. If you have a recommendation, that would be good.
Yeah, I
Uh,
would. I absolutely would. He's very knowledgeable. So
a- and let's see. What about if we were to move forward? Then that's kind of off question. But would you want me to write the offer on our own purchase agreement, or should we just use the state docs? Like, what would you think he would like?
do you have a preference, Martin?
Um, I'm not sure. Probably going with the state docs, I guess, because
Mhm.
that's consistent. Yeah.
Yeah, very easy. And then we could just put in our subject to addendum with the acknowledgments. Yeah, no, that's good. Let's see.
How does their homeowners insurance, how does all that work?
Yeah, yeah, no, that's a great question. We get our own insurance. At the close of escrow, we get our own title. Our title insurance would be all in place. Insurance on the home, everything would be in place before we closed. So.
And then
Okay.
what was my other question regarding around that? Oh, y'all don't do inspections, appraisals, nothing? Did I read that?
It's when we do, we're only checking roof, electrical box, foundation. We're
I
not
mean,
the
we're not worried. It's new house, but
Yeah, and that's what it's kind of laughable, but you never know. I mean, hail
yeah.
damage sometimes doesn't show up, but it's a very simple inspection. We usually do like a 7-day inspection period. And then just checking out the main things. We're not nitpicking or anything like that. So, just want to make sure the roof and foundation and panel box are good.
Yeah.
Yeah.
Okay.
Okay.
And then just for like confirmation, I'm going to take all this info to Victor, our underwriter, and just make sure where we need to be on this. But 6.7% interest. I have mortgage balance. Maybe this is just a rough estimate of 794,700 payoff.
Uh,
You
think
could also just email me the mortgage statement.
That
yeah.
sounds right from when we first met-ish. I don't know if that's
Yeah.
exact.
Okay. And then PITI 7,000.
That sounds right too. Martin, do you know?
Your monthly
No.
payment.
No. Yeah. Yeah. That's about right. Yeah.
Okay. Yeah. So as far as like our strategy for this would be the only way we would be able to cash flow would be doing something with an insurance company or traveling nurses. So that's kind of where we would be looking at it from our point of view. Um,
What do you mean with the insurance company? I get the travel nursing, but what is what's
yeah,
the
sometimes we do like like emergency homes. Sometimes when people need especially here in Oregon, anyways, in Washington, when the fires hit, people need a place to live. So we'd be looking at it from that point of view, just to be able to make up that cash flow because it's kind of a higher PITI. I have seen some homes go for like 8,000 a month, 6,400 a month. Um, so we definitely wouldn't be able to get it in do any type of Airbnb or long-term rental. It just wouldn't pencil out
Yeah.
numbers wise. So that's where
Uh,
my mind goes when I see those numbers. Um, but and then obviously, account for we're going to be paying closing costs, your commission, Bonnie, and then cash to seller. Let's see. Originally, I had 15,000 cash to seller at close.
And so how does that part work? They get what what else do they get and when do they get it?
Yeah, so I had it written it up just as a straight subject too. So at close we pay your commissions, and then at close we pay 15,000 to the seller, and
Okay.
then purchase price is 829,701. And then we typically close between 20 and 25 days, but it could be sooner. Depends on the title company. But I mean, have you, I guess you probably had, but have you been getting called a lot on taking over mortgage payments and stuff for this one, Bonnie?
I had one more about it, but it wasn't this clean.
Oh. Oh,
Yeah.
as far as like the email or
Well, no, just kind of like how they structure things and do things. It didn't seem as it just didn't seem price
well,
was fine. It just didn't seem, I don't know, it seemed a little something not I get creative financing, but it just didn't seem like they had their ducks in a row, if you understand what I'm saying.
yeah, yeah. It's kind of a scary world out there because with TikTok and YouTube University, I really do think that people are just like watch a few videos and then they start making calls and just hoping something sticks. And it's scary
Yeah,
because like if you're getting these things under contract and you're not, first of all, explaining like how the sellers are protected, how the agent's protected, that's a huge red flag. And
right.
I mean, this is what we've done for the last 4 years, and we've just recently, 2 years ago, switched to more creative. And man, it's scary because to be an agent, I used to be one. You're getting these calls, it's hard to take anyone serious, and that's why I like the Zoom calls because it's like, hey, I'm a real person. I live in Oregon, but this is what we do. That's why I'm happy to send references and stuff, but it's scary because
yeah.
I'll talk to agents where they're like, "Yeah, we went under contract," and I'm like, "Oh, great! What's their company name? What do they have a website or anything?" It's like, "Nope, nope," and it can put sellers in a position where, hey, what if the house burns down?
Yeah.
What if they do miss a payment? They don't have those
Yeah.
guarantees in the contract where that's scary.
Yeah,
Yeah.
I
So,
agree.
Yeah.
I agree.
yeah.
No, that was going to be a question, so I'm glad you brought that up. Is that I would love to see like some references and stuff
Mhm.
that we were able to
Yeah,
not doubting you, but doing our
yeah,
due
for sure.
diligence on our side for sure.
Yeah, we could show you previous HUDs and all that and other properties we own and stuff. So, but I'm happy to jump on a Zoom anytime. I'm gonna talk to Victor, see what he says about these numbers, and then either it'll be me reaching out or the finance team to put some contract together to send to you, Bonnie.
Yeah.
We'll use the Trek forms,
Yeah.
or unless you want to write up the offer, that's fine too.
No,
Um,
go ahead, go nuts.
okay.
Yeah.
Yeah.
Because
Um,
I just have to go back and forth on how you want it anyway. So
Okay. Cool. Yeah, and we can have our TC send it over too. So, yeah, that was like my only questions. If you want to and you have my email, whenever you get a copy of the mortgage statement, like the most recent one, just email that over. And that's like the last bit of info where we have the exact like numbers, which is just
Yeah.
nice to double check. Um, so we're not
Yeah. For
editing
sure.
all these contracts. Um, but yeah, I think I have all the info. Did you guys have any questions or?
Not right now. I think
oh, I do.
it's
I have one
definitely.
more for Martin. I have one more for
Oh yeah.
Martin. And maybe y'all touched on it when I got cut off. So he's planning to rent for the time being. How's he able to do that without this taking a hit to him?
Yeah, no, that's a good question. So, like, if he's renting, that should be fine. But if he's looking to buy, we're basically giving him access to a portal through Westar, so he's able to show any rental agency or future lender that he's not liable for the payments because it's going to be showing it's serviced through Westar under our LLC making those payments. So however long that is, it shouldn't be an effect, at least not to your debt to income. 75% of that should be taken off within the first year. So,
Okay.
yeah, there should be no issues there, especially the longer you go. I'm sure you're going to want to rent right away, but the longer you go on your purchase, the more of that DTI gets taken off. That's why typically a year is best, but if you want to buy tomorrow, we can structure it in a way where you're not affected by that mortgage being in your name.
Yeah.
And likewise for any rental companies, Yeah.
Yeah, that's great.
That's where that lease
I've got
purchase would come into effect. Like write it up for a year and show that. Mm-hmm.
Yeah. I've got to jump onto another meeting. Sorry, I've got another 6 p.m. The joys of having West Coast as part of your company. But I really appreciate your time, Bo. This is really interesting. I'll speak to Idra about this. Bonnie, we can reconnect after that a chance as well. And
I'll email you. I'll email you the link, Bonnie, to the Zoom, and if she wants to just look it over. But just hoping to provide an option for you guys. Might not be everyone's plan A, but at least it could be a backup. If you talk it over with your wife and whatever she says.
Yeah, great. Thank you. I really appreciate your time, Bo.
Thank you so much, Bo. Appreciate it.
Yep. Have a good night.
Thanks.
We'll talk.
Bye-bye.
Okay, bye.